clock. It's about whether there's going to be any algorithms doing any business in the first place. So one of the things we start to recognize, of course, is that we've got a top edge up here on gold. Real yields are rising. You can see the silver price is rising, but it's declining. So we've got a little bit of a divergence on silver against gold. And that's usually a good sign for a sell trade. The euro dollar is also starting to sell off. In terms of the timing, this is a 30-second chart. So we can see that we go from the idea of when that trade starts setting up, the clock starts, right? But it's right on 45 seconds, or 45 minutes, sorry. It's right on that button. So that's that trade there. You're going to be looking at that and saying it's right on the time. They're going to do business here. And obviously what happens is that the price goes up a little bit against that price, but it's only a little bit. They run the stops. There's the stop run. They're going to do business, right? They've got to do business because it's right on the time. So it's on its way up. They run the stops. They get the short trade on, and it makes some nice monies. Makes some nice monies. Not a massive trade, but still a reasonable trade off 1345. Now what happens, of course, is that the price retests back into it. And at that stage, that is still a sell order, remember. Why? Well, because the value is still divergent in the background. We're still seeing the silver market dropping. We still have this very strong real yields in the background, still giving you a strong idea that you should be short. You should be short gold, and it's up to you to try and get into that bit of business, right? Now, if it goes up, what you're looking at is saying, well, they're going to sell it if it goes up. That's good news. But what you're going to be thinking is, well, 1347, 1348, 1348 and a half, they've just lost the price entirely. They're not going to mark down the sell anymore because they've lost the value now, Paul. It's only if the price kind of hangs about this area that they're going to mark down the price, aren't they? Because they're not getting any value to sell it at the lower price anymore. So that trade's busted. That's a busted trade now, isn't it? There's no way forward for that trade to develop. And obviously at that stage, they just have to start thinking about what to do next. So you can see that we come into the we come into the 30, then the 45, and we start seeing the price rolling off again, and the price ultimately does drop quite nicely in terms of that real yield, which was very bearish in the first place. But when you're looking for trades, this is what we're trying to identify, isn't it? We're trying to identify why anybody would do business, and then how they're doing that bit of business. They're trying to identify how they're actually going ahead with that little piece of information. And if we can recognize how they're doing the business, we can start to recognize the opportunity. When silver recovered massively like this here, you're starting to think to yourself, damn, that was a big buy on silver. And now obviously you're looking at the overall divergence in this and saying, well, silver's went way overpriced. I could possibly take a quick short on silver, to be honest, if that was the trade you were looking for. And you could have hedged that out against a long trade on gold, and you can see that the gold price went up and the silver price went down. So that made a very easy profit. A very easy profit, right? But that's how you can trade spreads. That's how you can make some simple cash by trading a little bit of spread, by selling some silver here and buying gold here. It gives you the opportunity to watch to see what the value does. And when the value changes, you keep your short silver and then you sell some gold against it as well. So you go short silver and gold. And you make that big profit on gold shorts through that phase there. Your short silver position is still in profit at break even at the moment. So there isn't really a trade on gold just now, is there? The trade at the moment would be possibly a short silver trade at higher prints. That's where the trade would be located, is that short silver trade at higher prints. Now, the only thing you've got to try and remember is that perhaps silver's massively discounted overall, and which is why it's going up. Well, silver is discounted on a big picture, if you hadn't already noticed. Silver has a fair discount against gold overall. You can see that discount quite clearly when you zoom out a little bit. You can see silver's been trading at a really, really big discount so far to gold this morning. And obviously inside of that discount, you may well have been a buyer of loads of silver and a seller of gold, and that's what you should be trying to get into, is that habit of being short one of the metals and being long one of the other metals, which can either turn into a spread trade or simply a directional outright. Has that never occurred to anybody? That you could do those types of bits of business. Because that would make a lot of sense, would it not? That would make a lot of sense if you started to do those different bits of business. So during this whole chart here, you'd have been buying silver, buying silver, buying silver, buying silver, buying silver. And against that, you'd maybe try and sell gold, sell gold, sell gold, sell gold through that phase. Pretty good trade. Pretty good trade.